Hello everybody. Following on from my previous video, what I've decided to do is to break some of our results up into small components and talk about different areas of how transaction capital has performed over the last 6 months and how we will continue to perform going forward into the next half of this financial year. SA Taxi 2 has an earnings growth track record proven over 20 years, with its strategic initiatives remaining valid. In SA Taxi Protect, gross written premiums increased 16%, driven by its strategy to increase customer acquisitions in the open market via our network of over 100 brokers. The cost of claim continues to reduce via efficiencies in SA Taxi Auto Parts and SA Taxi Auto Repairs. In SA Taxi Direct, we are moving to newly located premises in Midrand in the fourth quarter of the 2020 financial year. In SA Taxi Finance, gross loans and advances increased by 14%, despite the number of loans originated reducing by 9%. This was driven by industrial action at the Toyota plant in January 2020 and COVID-19 disruptions at the end of March 2020. The strategic focus on our pre-owned vehicles continues, as this provides a reliable and affordable alternative to new vehicles in this challenging environment. In SA Taxi Auto Repairs, we've invested to increase our refurbishment capability, with various refurbishment facilities under development. And in SA Taxi Auto Parts, we continue to develop our sales channel for new and pre-owned auto parts, including wholesale to SA Taxi Auto Repairs and other external repairers, and retailing to SA Taxi clients and open market operators. The majority of these open market operators are new to SA Taxi, yielding cross-selling opportunities. Finally, the strategy in SA Taxi Rewards in the medium term is to combine telematics, rewards and credit into a single transaction-based account for the minibus taxi industry. Slide 8 sets out some of SA Taxi's near-term expectations. Looking forward, SA Taxi will continue to support the minibus taxi industry, commuters and clients. Some of these initiatives are set out on the left-hand side of slide 8. Although we anticipate a reduction in activities in the short term due to COVID-19, as set out on the rest of the slide, our business model and strategies remain 100% valid, with operations expected to recover and normalise quickly. TCRS2 has a strong earnings growth track record proven over 20 years, with most of its strategic initiatives remaining valid and certain of them deferred into the next financial year. Strategic highlights include a robust performance from Recoveries Corporation in Australia, with our Australian strategy on track. In South Africa, collections revenue increased by 20%, despite the challenging environment. Excellent revenue growth in collections of South African NPL portfolios positively offset the expected slowdown in contingency collection revenues. We see some excellent medium-term opportunities from COVID-19, with our clients requiring additional risk support from TCRS owing to a strained consumer environment and the potential disruption within their call centres. This may result in increased NPL portfolios to either be acquired or collected as an agent over the near and medium term. A further strategic highlight is the realignment of TCRS. This includes the creation of a single scaled transactional services platform, including TCBS, First, which was acquired in December 2019, and Axis, which was acquired in December 2017. Principa, which was considered non-core and subscale, was disposed of in April 2020, and the wind down of TCBS's portfolio began, firstly to reduce capital risk to the vulnerable SME sector, and secondly to bolster liquidity. TC Global Finance is to be managed now by the Group Executive Office going forward. TC has deployed €8.7 million to date, with initial returns in line with expectations, and has appointed a CEO to lead the strategy, which remains valid but deferred to the 2021 financial year, as TC believes that it is prudent to retain liquidity while the European markets stabilise. Looking forward over the near term, TCRS expects the reduced acquisition of NPL portfolios in South Africa, Australia and Europe as we follow a cautious approach over the short term. Over the medium to long term, however, this strategy remains 100% valid. As such, the undeployed capital allocated to NPL portfolios is now available to bolster liquidity in our divisions if required. Until next time, stay safe, stay healthy, and stay productive.